So were you guys aware that the US shale boom of the 2010s was a massive, massive subsidy for China? I think it's a commonplace, it's a well-known fact that China's massive economic growth over the past 3 decades is sort of directly supported and encouraged by the developed world, the United States, Europe, Japan. That's what made China rich. What I think is less appreciated is that one of the largest gifts that the United States ever gave to China didn't happen in the 90s, the 80s, the 90s, the aughts. It happened in the teens. It happened during a period of time when every US president really were huge in talking about how aggressive they were against China. Yet under their presidencies, we gave the biggest gift to China that perhaps we ever gave, and that was the US shale boom. These are 2 topics that we talk a lot about on this channel, the Chinese economic growth miracle and the way that it's fading, and we talk about oil markets a lot on this channel, but we've never tried to talk about them together, and that's what I want to try to do today, is put these 2 narratives together because they're almost never talked about together. Today I dove in and read a couple, big think pieces. I mean, Foreign Affairs read like 30, 40 pages in this, only a couple pages in The Economist, talking about China's failing economic model. And it's fascinating because they just don't mention the shale gas gift that we gave to China. China is a country that is tremendously dependent on oil and gas imports. And the United States government, and probably more importantly, the United States financial sector, Wall Street, subsidized to the tune of hundreds of billions of dollars, investment that Wall Street never got back, into making the inputs of China's economy as cheap as possible. This had the result of helping China during a very difficult time. The whole past decade has been a very difficult time for China, economically speaking. I think it's worth clarifying where I come down on the question of, is China failing, a little bit further. I think that the information that The Economist and Foreign Affairs put forward is very interesting, very useful, and does paint a very disturbing picture of the management or mismanagement of the Chinese economy. What I'm not willing to do is jump 3 steps forward the way that geopolitical analysts like Peter Zeihan and a larger and larger group of the Washington, D.C. commentariat is willing to do. In their minds, because China has all these problems, then they're clearly on the way to massive, massive failure. I think it's worth pointing out that even in the context of slowing Chinese growth, in the context of continued failure to reform, it's not like China's just going to evaporate. China is still usually putting up growth numbers of 3 to 6% a year. It's getting bigger. It is already massive. It is a tremendous facet of the world economy, and it will continue to be so. However, with that acknowledged, it is worth pointing out that for the past decade, for the entire Xi Jinping era in China, the Chinese economy has kind of been flailing. It's not like they don't know what they have to do. They know that there are certain reforms that must be made to improve the nature of the Chinese economy, to allow it to escape the middle income trap. The middle income trap is something that Chinese leaders and Chinese economists talk about all the time, and they know the reforms that they have to make to try to get out of it. The problem is that over and over again, they attempt to make these reforms in bold, disruptive ways, and then they get more disruption than they want. Reforms in the aughts led to stock market crashes, too much money leaving the country too quickly. Most famously and most recently, we've got the collapse of the Chinese real estate market that has been brought about by this sensible urge for reform. The Chinese government decided that their economy was too real estate focused, so they made efforts to stop that and reform that, and led to a massive, massive crash that they are now going back on their reforms to fix. This is a constant problem for the Chinese economy. Again, this does not mean that China's about to collapse or evaporate or anything like that. It just means that they are having completely understandable growing pains. Now that the easy victories of catch-up economic growth and heavy industrialization have dissipated. And yes, demographics are a huge, huge problem for the country. So it's worth pointing this out, it's worth addressing this. But what's so shocking to me is when I read these big long reports in The Economist or Foreign Affairs, is that they make absolutely no mention of one of the biggest dynamics in the Chinese economic growth story over the past decade. And one of those biggest dynamics has been inordinately cheap oil and gas. The surprising plummet in oil and gas prices between 2014 and 2020 is something that we've covered a lot on this channel. Specifically, we're pretty focused on the Middle East, and I proposed in, I think, 2015 or 2016 or so, that the continued lower for longer oil prices would lead to a plummet in worldwide jihadi terrorism. And that's, of course, exactly what happened. But the implications go far, far beyond the Middle East. It has been a tremendous factor in the economy of every country in the world. The oil and gas revolution that happened in the United States. What happened was technology, technological innovation, greatly subsidized by the US government and by US investors. The mantra, the belief that it was impossible to ever not make money taking out oil and gas, led to a tsunami of money that was just shoveled in to Texas, Oklahoma, and a range of other US markets for a wide variety of technologies, directional drilling, fracking, that all together created a situation where the United States went from a net importer of oil and gas into a net exporter. In fact, the United States in, I believe, the mid-2010s or the early 2010s, regained a position that it had lost in the 1970s. From the beginning of the worldwide oil and gas industry until the 1970s, the United States was the largest oil producer. We lost that crown in the 1970s, and because of this tidal wave of money, in the 2010s, the United States was able to regain that crown, become the largest producer of oil, and I believe possibly gas as well, in the entire world. This was a true technological triumph, but it had some very real financial downsides. It really was only brought home to everybody in 2020, when we experienced a period of negative oil prices in 2020, but all of this production was not actually profitable. It was not actually something that the US investors were profiting from. Nobody was actually making money. The extraordinary figure that you can find on Bloomberg, all over the internet, is that Wall Street lost $300 billion on the US oil and gas industry over a 10-year period. $300 billion that was just given away in the interests of driving down worldwide oil and gas prices. This had positive effects in many places, but what's interesting and surprising to me is that we never make the connection between this policy of lowering oil and gas prices and the continued ability of the Chinese economy, the Chinese government, the Chinese Communist Party to experiment and figure things out and do this back and forth, trying to figure it out process that they've been doing for the past decade. Without the US oil and gas revolution, China would not have had anywhere near as much of a runway to sort of figure shit out, and their economic growth would be significantly lower. There's a graph in the May 28th issue of The Economist that does a great job of illustrating just how important oil and gas prices have been to the Chinese economy. The Economist is kind of proud of some of China's efforts and has pointed out that China's efforts to become a little more independent of the rest of the world economy have been somewhat successful. But the graph that they use to support this is, interestingly, just a graph of world oil and gas prices. It's not called a graph of world oil and gas prices. It's a imports of goods and services as a percent of GDP for China. But if you look at this graph, it is exactly the same graph that I've been showing you for a decade with world oil prices. You've got the incredible run up in oil prices, oil and gas prices in the 2008 period. It's very high for a point, and then it drops off. 2010 starts going up again in 2012, and then in 2014, this entire period where the percentage of imports of goods and services, the percent of China's GDP, is falling, this entire period from 2014 to 2020, that is also the period when the oil and gas prices worldwide entered this almost decade-long doldrums that they've been experiencing. It's kind of fascinating that nobody at The Economist highlighted this really simple, really obvious correlation. I think it's worth questioning why it is that nobody talks about this. I mean, it's a really obvious connection that nobody seems to want to make. I think it's got something to do with narratives. Donald Trump and Barack Obama both really loved trumpeting this idea of US energy dominance. I think energy dominance was Trump's way of talking about it, but actually most of the development and ratcheting up in scale that we were talking about actually happened during the Obama administration, but the Obama and Trump administrations were unified in celebrating this energy independence or energy dominance that had been created. But also, both the Obama and Trump administrations and the whole US military-industrial media complex writ large, they're all really invested in this idea that over the past decade, we've really been cracking down on China. We've really been, sticking it to them. And it's really kind of stunning if you look at that graph, just how the main successes of the Chinese economy in achieving independence, in saving money, in being able to keep economic growth together, one of the main components, if not the main component, has been the Obama and Trump policy of US energy independence and energy dominance, and Wall Street's funneling, $300 billion towards this industry. It's kind of fascinating, and it's also, I think, really interesting that nobody puts these two narratives together, which, is what I'm trying to do today. Now, of course, we are in a new era. Neither Wall Street nor the oil and gas industry likes Biden as much as they liked Trump, so they are no longer burning up money to produce more. Even now, in a situation when markets have become tighter, they're now more focused on making money. I think there is a malicious interpretation of this. I think there is just a fact that oil men and Wall Street people tend to be Republicans and are happier to give low oil prices to a Republican. But I think there's also just rationality. I think it's really easy to be partisan about this, but I think at a certain point, Wall Street and the oil and gas industry in the United States had to stop just burning up money. Literally $300 billion was just sort of burned up. Nobody made any profit or money off of that in the 2010s. And at a certain point, Wall Street and the oil and gas industry actually had to say, wait, stop, we need to make money. And they've been doing that over the past couple of years. They've been doing that on a massive, massive scale. But what's happened now is that oil and gas actually costs more like what it should cost. And I think for folks who want to see less oil and gas being used, it's better that prices are going up. But I think it's also important to point out that this isn't some green, crazy, left-wing environmentalist thing that brought oil and gas prices up to their current height. I mean, there's aspects of that for sure, but I think really what it is these are the oil and gas prices that the market actually provides when the market isn't being massively subsidized by Wall Street people burning up their investments. This is what oil and gas should cost. And I think this is another thing that is very interesting, and another aspect of why we don't hear about this connection so much is that I think this is another arena where things are about to get much more difficult for the Chinese economy, for the Chinese Communist Party. They're running out of that runway now that this subsidy is over. And I think that's going to be a really interesting dynamic in the 2020s, because I do believe oil and gas prices will eventually float down again. But the era of Wall Street and the US government being willing to massively subsidize cheaper oil and gas for everyone in the world, I think that's probably over. Thanks for watching. Please subscribe.